Hey guys, welcome to the COB channel, and today we are going to discuss cost concepts and classifications. So a cost is defined as a resource that is sacrificed or foregone to achieve a specific objective. If this cost was incurred in the past, then it's called an actual cost. And generally speaking, these are the costs that are shown in your financial statements. On the other hand, if these costs were predicted or estimated, then they are called budgeted costs, and these are usually used for the management to make economical decisions. So a few other terms are cost object, which is anything for which a cost is desired. This can be a product, an activity, and a service, or a department. And we also have cost accumulation, which is the systematic collection and assignment of cost data to cost objects for making and implementing decisions. So generally, we have two classifications of costs, which are direct and indirect. If a cost can be traced in an economically feasible manner, then it's called a direct cost. Let's say our cost object was bread. Then the direct cost of it would be the ingredients such as flour and eggs. On the other hand, if these costs cannot be traced in an economically feasible manner, then it's called an indirect cost. Going back to our bread example, an example of this would be the electricity consumed of the ovens to bake the bread. So when it comes to cost assignment, there are two types, which are cost tracing and cost allocation. If you are assigning direct costs to a cost object, then it's called cost tracing because you can directly trace the cost to the object. If it is an indirect cost that is being assigned to a cost object, then it's called cost allocation. Since you couldn't trace it directly, then these costs are allocated. So as mentioned earlier, an example of a cost object would be an activity, which is an event or a task that has a purpose. So when it comes to total variable costs, they change depending on the level of activity. So as the activity increases, the cost increases as well. However, the unit variable cost will remain the same. On the other hand, we have fixed costs. So the total fixed cost will remain constant regardless of the activity changes. However, when it comes to the unit fixed cost, as the activity increases, the unit fixed cost will decrease. All of these statements will be true as long as the amounts are within the relevant range, which is the specific activity level. Now let's move on to inventories. There are basically three types: direct materials, work in process, and finished goods. So direct materials are those that become an integral part of your product. So as mentioned earlier, for the bread, it would be the ingredients. And for the second inventory, we have work in process, which are the partially completed goods. So an example of this would be the dough, which was not baked yet. And last, we have the finished goods, which are the goods that are completed but not yet sold. So this would be your end product. So moving on to manufacturing costs, there are three as well. There are direct materials costs, direct manufacturing labor costs, and indirect manufacturing costs. So the direct material costs are those that eventually becomes a part of your cost object. Next, we have the direct manufacturing labor costs, which are the compensations for the labor done. So an example of this would be the salaries for the baker. And last, we have the indirect manufacturing costs, which is also known as manufacturing overhead or factory overhead. So all manufacturing costs that were mentioned earlier are considered product or inventoriable costs. These are recognized as assets when they are incurred and expensed when the product is sold. On the other hand, we have period costs, which are the non-manufacturing costs. Example of these would be selling costs and administrative costs, and these costs are expensed immediately. So just to have a quick overview, our product costs consist of direct materials, direct labor, and manufacturing overhead. On the other hand, we have period costs, which consist of distribution expenses and administrative expenses. Direct materials and direct labor are considered direct costs, while manufacturing overhead is considered as an indirect costs. If you're going to combine direct materials and direct labor, then you will have what you call prime costs. And if you add the direct labor and manufacturing overhead, then you would have what you call the conversion costs. Prime costs are called so because without them, the product could not be made. And conversion costs are called so because these are the ones that convert the materials to the finished product. So that ends today's video. Thank you for watching. If you have any comments, concerns, or feedback, just leave them down in the comment section below. Give us a thumbs up and don't forget to subscribe.